I don't know if this is going to be a huge volume maker. I think it's a great market entry for Tesla, and it really showcases the technology that they have. But ultimately, the future of Tesla really rides on the Model 3, Model Y, and then this new Model 2, and what it does, again, with autonomy, FSD, licensing it to other OEMs. That's really where I think investors should focus.
The recent drop in Tesla's stock price has been quite concerning for some Tesla investors. But there are a few things that we're going to point out in this video that could help you make better decisions about your shares, especially if you're a Tesla investor. We will particularly focus on the comments from seasoned investors and stock analysts like Tom Narayan, who has once again reiterated the massiveness of Tesla as a company and the benefits of investing in its stock. So keep watching as we take you on an eye-opening journey and discuss why Tom isn't buying into some of the worries that we've seen from other analysts recently. Let's dive in.
Tesla shares in the red for the week. We're looking at a loss of just over 7%. The stock taking a hit after recent price cuts pressured margins in its most recent quarter, and that overshadowed beats that Tesla posted on both the top and bottom lines. Here with more on what this means for the EV giant and also what we could expect here from other automakers over the next several weeks. I want to bring in Tom Narayan. He's RBC Capital Markets equity analyst. Tom, it's great to see you here. So despite some of the concerns that we're seeing from the street, you reiterated your outperform rating. You kept your price target of 305. Why aren't you buying into some of the worry that we have seen from others, from some of your peers?
Well, I think Tesla is kind of a little different than some of the peers, right? So I think, for Tesla, it's really about the future, like way into the future. Their numbers came in great. It's just that they did say that they're going to be cutting some production in the third quarter. A lot of folks wanted them to blow out of the park and raise the guidance on Model 3 and Model Y production for the year. That's probably not happening. So I think some kind of short-sighted people probably took some money off the table there. But really, it's about what Elon said on the call, licensing FSD. That's going to be a game changer. That's the biggest driver, really, for my 305 price target.
Despite some of the concerns from Wall Street, Tom Narayan reiterated his outperform rating on Tesla, keeping his price target of $305 per share. According to the analyst, he thinks Tesla is different when compared to some of its peers, adding that for Tesla, it's really about the future and the way into that future. Hey everyone, welcome back to Tesla Tomorrow. In his recent interview, Tom Narayan commented that Tesla numbers came in nicely, even though a lot of people wanted the automaker to blow it out of the park and raise the guidance on Model 3 and Model Y production for the year. Tesla stock dropped about 9.7%, its worst day since April, after the EV maker reported a revenue and earnings beat, but many confirmed that margins came in below expectations. Ahead of the earnings report, Tesla stock had gained more than 130% this year, showing immense potential for growth. However, the recent drop in Tesla's price has dampened investors' hopes. And here's what Tom Narayan thinks about this. Let's get into it. But before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. There are a few critical takeouts from Tom Narayan's recent interview. First, Tesla's plan to license FSD will be a game changer, and is probably the biggest driver for his $305 price target. Second, while Tesla's continuous price cuts may signal a demand issue, he believes that any price cut in Q3 is planned, and Tesla may be looking to upgrade its production plants. Therefore, those who keep propagating the idea of Tesla's perceived demand problem, especially with the Model 3 and Y, may be getting it wrong, and the short-sighted ones are already taking money off the table. A lot of people have failed to understand the work that Tesla's done and its potential for future growth. Think about it. Tesla is already showing that there are a lot of ways that it can make money. The automaker offers subscriptions for extra features on its cars, offers insurance, sells emissions credits to other car manufacturers, and even plans to open up its own supercharger network to other EVs. This strong revenue base has resulted in several bullish predictions for Tesla. For instance, Morgan Stanley analyst Adam Jonas has long rated Tesla stock not just on the margins that it makes from selling cars, but also the additional revenue that it could make from subscriptions, insurance, supercharging, battery storage, and selling mobility, even though he's not priced the promise of FSD and robotaxis into this. In a recent report, Jonas noted that Tesla led other car makers on virtually every metric about the future, on vertical integration, margins, and of course FSD. And this is absolutely true. Stanford University futurist Tony Seba predicted a few years ago that robotaxis, Tesla's autonomous electric cars, would dominate the global market by 2030. Similarly, ARK Invest has put out a new report suggesting that autonomous vehicles could be one of the most productive innovations of all time. The investment firm supports Musk's contention that despite the headlines that are seen in the mainstream media about Tesla cars, autonomous cars will potentially reduce accident rates and slash transportation costs. Even Elon Musk suggests that this could be by a factor of 10 or more. ARK Invest's latest analysis includes some stunning numbers of its own, which have enormous implications for the oil and the legacy car industry. It estimates the lift in production from autonomous vehicles could be around $17 trillion globally per year, while autonomous car sales to fleet operators will be around $1 trillion a year. Analysts like Adam Jonas and firms like ARK Invest have noted that no car companies come close to Tesla when it comes to software development, and this fact has further been established by Ford CEO Jim Farley, who disclosed that his company's software development had been outsourced to multiple companies over the years, and it still doesn't come close. No doubt there's been a lot of concerns about Tesla's AI, especially with Musk announcing a new company. However, what analysts need to understand is that this is a whole new sector for Tesla. During the company's recent earnings call, Truist analyst William Stein asked Musk about xAI, a tech venture that he's launched and incorporated in Nevada. And in his response, Musk disclosed that the startup aims to compete with Google Bard or OpenAI's ChatGPT someday, and even plans to collaborate with Tesla on software and silicon alike. But that's not even all. Stein asked Musk about investors who think there might be quite a bit of value in the AI features and products of Tesla, as it might be concerning to see the CEO pursuing another endeavor where AI is the focus. The bone of contention here is whether xAI will compete with Tesla or perhaps enhance the value of what Tesla already does. Here's what Musk had to say. There were just some of the world's best AI engineers and scientists that were willing to join a startup, but they were not willing to join a large, sort of relatively established company like Tesla. So I was like, better it's a startup that I run than they go somewhere else. Simply put, Musk is claiming xAI and its focus on artificial general intelligence will bring some value to Tesla. And this recent launch was all about getting the right people for the task. Musk is very bullish about Tesla's AI, particularly with FSD. And we believe one of the reasons for this is that the stock market has suddenly taken notice of AI and revalued stocks accordingly. Therefore, because of Tesla's work on FSD, its Dojo's supercomputer training system, and the Optimus robot, the company exists as one of the world's leaders, staying ahead of any of its auto rivals. But what do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.